Hi everyone, welcome to my YouTube channel Later Work CMA. We'll start with the introduction to cost accounting. This topic is very important since this is the basics and has a weightage of 5%. So make sure you understand it well. Let's first talk about accounting. According to the American Accounting Association, accounting is defined as the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. So, what does this mean? It means accounting helps us gather important financial information and measure it properly and then share it with the people who need it, like managers, investors, or any other stakeholders. With this information, they can make smart decisions. We can break it down into a simple flow: accounting, process, end product, and decision making. So, accounting is a process of which the end product can be used for decision making. So, accounting starts with collecting data, processing it, preparing reports, and finally helping people make decisions. Now, the information we deal with in accounting can be of two types: financial information and non financial information. Financial information like sales, expenses, profit, etc., and non financial information such as customer satisfaction, production efficiency, or market trends, etc. Finally, we have something called cost information. This is a type of financial information that is specifically related to the cost of making a product or providing a service. It helps business figure out how much it costs to produce something and where they can improve or save money. Let's continue learning more about cost accounting. So, what exactly is cost accounting? Cost accounting is a branch of accounting that deals with the entire process of collecting, preparing, and presenting cost information. It's not just about numbers, it's about understanding where money is spent and how efficiently resources are being used. And this information is provided by cost accounting system, which helps businesses track and analyze all cost related details. Let's see what kind of information this includes. First one, unit cost of a product, work, or service. Cost accounting helps in finding out how much it costs to produce one unit of a product or service. Second, various elements of cost. This includes all the expenses involved in a department or factory, such as materials, labor, and overheads. The third point is the volume of waste and technological losses. Cost accounting helps identify how much waste or loss is happening during production and how technology can reduce it. The fourth point is the costs related to activities. Cost accounting shows how much each activity or process in the business is costing. And the last one is cost analysis. This is done to support decision making and more improve efficiency. So, cost accounting gives a complete picture of where money is being used and how to manage it better. Now, the question is, who uses this cost information? There are two types of users: internal users and external users. Internal users are those people within the organization, like managers and employees, who use this information to plan and control operations. External users, on the other hand, includes investors, creditors, or government agencies who are interested in understanding the company's cost structure. With this, we can see that cost accounting plays a key role in helping both the organization and external parties making informed decisions. Okay, let's go over some basic terms that are essential to understand. First one, costing. Costing is the technique and process of ascertaining cost. In simple words, costing is all about finding out how much it costs to produce a product or service. It's the method we use to figure out expense and track them properly. Second one is cost accounting, and this is a more developed system. It's the process of accounting for cost from the point at which expenditure is incurred or committed and understanding how it relates to cost centers and cost units. This means that once a company spends money or commits to spending it, cost accounting helps track where those costs are going and how they are connected to different departments or parts of the business. The third one is cost accountancy, and this is the broadest of the three. Cost accountancy is the application of costing and cost accounting principles, methods, and techniques to control costs, determine profitability, and present information for managerial decision making. In short, cost accountancy combines both costing and cost accounting to help managers make smart decisions, control expenses, and ensure that the company is profitable. So, to sum up, costing helps you find out cost. Cost accounting helps you record and analyze these costs. Then, cost accountancy helps all these methods to control cost and support decision making. Understanding these terms is very important because they form the foundation of cost related decision in every business. Now that we have learned the basic terms, let's look at the objectives of cost accounting. These objectives explain why cost accounting is so important for businesses. First one, ascertainment of cost per unit. One of the main objectives is to find out how much it costs to produce one unit of a product or service. For example, it helps determine cost per kilogram, cost per meter, cost per liter, and cost per ton. This information is useful to plan and manage production efficiency. Second point is fixation of selling price. Cost accounting helps businesses decide the right selling price for their products. By knowing how much it costs to produce something, businesses can set prices that cover cost and ensure a profit. Third one is cost control and reduction. Cost accounting helps in controlling and reducing unnecessary expenses. It identifies where costs are higher than expected and suggests ways to cut down waste and improve efficiency. The fourth point is profitability analysis. It also helps analyze how profitable each division, activity, or unit is. By looking at this information, businesses can understand which parts are doing well and which need improvement. The fifth point is identification of the inefficiencies. Cost accounting helps in locating wastages and inefficiencies in production or services. It helps identify gaps where improvements can be made to save money and resources. And the sixth point is decision making support. Finally, cost accounting provides relevant data that helps managers make informed decisions. Good decision making is crucial because it directly affects the success or failure of the organization. With accurate cost information, managers can plan better and make strategic choices. To sum up, cost accounting isn't just about numbers, it's about making businesses smarter, more efficient, and more profitable. The next topic is the scope of cost accounting. This means the areas where cost accounting is applied and how it helps businesses in different ways. Let's go through each point. First one, cost bookkeeping. This involves recording all costs using the double entry system. Just like regular accounting, it helps in keeping a proper track of expenses. Second one, cost ascertainment. This is about finding out the cost of products, jobs, or service. It's used for pricing, planning, and controlling expenses. Knowing accurate cost helps businesses make better decisions. Third one is cost analysis. Here, cost accounting helps to find reasons why actual costs are different from expected or budgeted costs. It helps figure out who or what caused the increase in cost so that solutions can be applied. The fourth one is cost comparisons. This means comparing costs from different methods, products, or time periods to choose the best option. It helps businesses pick the most cost effective way to operate. The fifth one is cost control. Cost control checks if current costs are within the acceptable limits and identifies areas where costs can be reduced or managed better. This helps improve efficiency and avoid unnecessary expenses. The sixth point is cost reports. Cost reports are prepared to help management with planning, controlling, and making decisions. These reports give a clear picture of where money is going and how resources are being used. The seventh one is cost audit. A cost audit involves verifying cost records to ensure correctness and checking if rules and principles are being followed. It ensures that everything is accurate and complete. To sum up, the scope of cost accounting covers everything from the recording costs to analyzing and managing them. It is a comprehensive system that supports better planning, controlling, and decision making in businesses. Next, we are going to learn about the cost accounting systems. These are different methods businesses use to record, analyze, and control costs in various ways. Let's go through each one in detail. First one is historical cost. In this system, the cost is recorded after it has been incurred. It's mainly used to compare actual costs with standard or expected cost later on. This helps businesses analyze past performance, understand where they spend more, and improve in the future. The second one is absorption costing. Here, all costs, that is fixed and variable costs, are included in the product cost. Overheads are absorbed based on cost units or cost centers, meaning they are distributed across products. It's widely used in inventory valuation and profit calculation because it gives a complete picture of the product cost. The third one is direct costing. Only variable costs are charged to the products, while fixed costs are treated as period costs. This system is particularly useful for decision making, like conducting break-even analysis and determining profitability. The fourth one is standard costing. In this system, costs are preset or standardized and later compared to actual costs. It helps in cost control and variance analysis, identifying where differences occurs and how to fix them. It's also used for fixing selling prices and evaluating performance. The fifth one is uniform costing. Here, the same costing methods are used by multiple organizations. It helps in comparison and benchmarking, making it easier to evaluate performance across companies. It promotes consistency in costing practices, which is essential for accuracy and fairness. To sum up, different cost accounting systems helps businesses record, analyze, and control costs in the best way possible depending on their needs. Each system has its own strengths, and choosing the right one helps in planning, pricing, and improving performance. Okay, the next topic is essentials of a good cost accounting system. If you're running a business or managing finances, understanding these key principles will help you improve cost management and boost overall efficiency. So let's break it down. First one is simplicity. A good cost accounting system should be easy to use and tailored to your business needs. If the system is too complex, it can overwhelm your team and actually create more confusion. The goal is to have something that's effective and user friendly. The second one is accuracy. Accuracy is critical. A core system that gives incorrect data can mislead your business decisions, which can be disastrous. The right system should provide precise cost information, ensuring that decisions are made based on reliable data. The third one is cooperation. Now let's talk about cooperation. For any cost accounting system to work effectively, it needs support from all departments. If only one team is on board, the data might be incomplete or biased. Collaboration ensures that all perspectives are accounted for, leading to more accurate financial insights. The fourth one is flexibility. Flexibility is key. Your business will evolve, and so should your cost accounting system. Whether it's a new product line or market changes, a good system can adapt to those shifts, keeping you in control no matter what comes your way. Fifth one is avoid unnecessary details. Now, simplicity again without overcomplicating things. A cost accounting system should avoid unnecessary details. Adding too much complexities can create confusions and inefficiencies. Focus on what's important and keep things streamlined. The sixth point is cost benefit orientation. Let's talk about cost versus benefit. The data your system provides should be worth more than what it costs to maintain. If the cost of the system outweighs the benefits, it might be time to rethink your approach. The seventh one is efficiency. Finally, efficiency. A good cost accounting system should help your business make timely decisions. It should boost performance by providing quick insights that lead to smarter choices. When the system is efficient, your business moves faster and more effectively. So, there you have it, the essentials of a good cost accounting system: simple, accurate, collaborative, flexible, and efficient. Next, we will see how to install a cost accounting system in your business. Whether you are running a small startup or a large corporation, there are several factors that determine how your cost accounting should be set up. Let's dive into it. The first one is size of the firm. Size of your firm plays a big role in the design of your cost accounting system. For larger firms, you will have more data, and that means more complexity. Your system needs to be robust enough to handle large volumes of data and track detailed information. In contrast, smaller businesses may need simpler systems that focus on essential details. The second one is manufacturing process. Next, consider your manufacturing process. The type of production process you use, whether it's continuous, batch based, or job based. This affects the way you design your cost system. For example, continuous production needs a system that tracks cost over long periods, while batch or job based production may require tracking costs for specific jobs or batches. Your cost system must match the production method you are using. The third one is nature and number of products. Another critical factor is the nature and number of products you produce. If your company only produces one product, cost allocation is fairly straightforward. However, if you use multiple products, things get more complicated. You will need a system that can allocate both direct and indirect costs accurately across various products, making the system more complex but necessary for accurate financial reporting. The fourth one is management control needs. Let's talk about management control needs. Your core system should be designed to meet the specific needs of managers at different levels, from strategic decisions to day to day cost control. The system must provide relevant data for decision making. A well installed system will give managers the insights they need to control cost and make informed choices. Fifth one is raw materials. Raw materials are another key consideration. The design of your core system depends on the types of materials you use and how much waste or spoilage occurs. A good cost system should track spoilage, storage, and material costs accurately, ensuring that no material related costs go unnoticed. Proper tracking helps in budgeting and cost control. The sixth one is organizational structure. Your company's organizational structure should also align with the cost accounting system. The system should reflect the hierarchy of your organization, defining who is responsible for what costs. This ensures that each department or team knows its cost responsibility, helping to improve accountability across the business. The seventh and the last point is external factors. Lastly, we can't forget about external factors. Laws, rules, and industry standards can all influence the decision and design of your core system. For example, certain industries have mandatory cost accounting rules that you must follow. Your system must apply with these regulations, ensuring that your business stays on the right side of the law. The next topic is limitations of cost accounting system. While they are incredibly helpful for managing and tracking business costs, they do come with their own set of challenges. First one, it is expensive to install. Cost systems can be expensive to install. Setting up a cost accounting system requires significant time and resources. There are software costs, implementation costs, and sometimes even staff training involved. However, while the initial investment may seem high over time, the system can help reduce overall costs by improving efficiency and cost control. The second one is different from financial accounts. The number you see in cost accounts often don't match up with what's in your financial statements. This means you will need to do some reconciliation to make sure everything aligns. While the financial accounts focus on the overall business performance, cost accounting is all about understanding the cost involved in production and operations. The third point is different opinions. Cost accountants may disagree on what costs should be included or how certain costs should be treated. For example, one accountant might think certain overhead should be included in the production cost, while another might not. These disagreements can lead to inconsistencies in reporting and affect the system's reliability. Fourth limitation, not always exact. Cost accounting often relies on estimates, conventions, and flexible assumptions, so it may not be provide completely accurate numbers. This is especially true for areas like overhead allocation or estimating material cost. While the system gives a close approximation, it's important to recognize that the data may look precision. The fifth limitation is reasons for inexact course data. Now let's look at some of the reasons for inexact course data. There are several factors that contribute to this. First, costs are classified differently by different firms. One business might categorize certain expenses as fixed, while another might treat them as variable, leading to inconsistencies. Second, material costs are often used and based on average or standard prices. This can lead to discrepancies, especially if actual prices fluctuate. Third, overhead expenses are usually distributed using assumptions. This is necessary, but it's not always going to be 100% accurate. Fourth, joint cost allocation can be complex. When multiple products share the same resources, it's not always easy to determine exactly how to allocate the cost among them. Finally, semi-variable costs are another challenge. These costs have both fixed and variable components, and they need to be estimated, which can reduce their accuracy. So, as you can see, while cost accounting systems are invaluable tools for managing business expenses, they do come with some limitations. They can be costly to set up, may differ from financial accounts, and the data is not always exact due to the nature of estimates and assumptions. It's important to be aware of these limitations and make sure your cost system is regularly reviewed and refined. Okay, the next topic is differences between cost accounting, financial accounting, and management accounting. If you're being confused about which one does what, don't worry. By the end of this, you will have a clear understanding of how each type of accounting serves a unique purpose. Let's get started. The first point or base is purpose. Let's begin with the purpose of each. Cost accounting is all about calculating and controlling the cost of products or services. Financial accounting focuses on recording financial transactions and preparing final accounts like the profit and loss statement and balance sheet. On the other hand, management accounting provides insights for internal decision making, planning, and control. The second base are users. Who actually uses this data? Cost accounting is mainly used by internal managers to analyze and control cost. Financial accounting is designed for external users like shareholders, tax authorities, and banks. Management accounting is strictly for internal use by the top and middle management. Third point is nature of data. Each system works with different types of data. Cost accounting deals with cost related data, things like materials, labor, and overheads. Financial accounting uses monetary transactions only, and management accounting combines both cost and financial data, and sometimes even non financial information like performance metrics or market trends. The fourth point is time focus, time wise. Here's how they differ. Cost accounting focuses on the present and future, especially for cost control and planning. Financial accounting is all about the past, summarizing what has already happened. And management accounting looks ahead into the future, helping plan strategies and make projections. The fifth point is legal requirement. Do you have to maintain these systems? Cost accounting is not compulsory except for some regulated industries. Financial accounting is legally required for all registered companies and management accounting has no legal obligation. It's completely optional and internal. The sixth point is rules and format. Let's talk about the structure. Cost accounting doesn't follow a fixed format. It's flexible based on internal policies. Financial accounting must follow legal frameworks like the Companies Act and accounting standards. And accounting is again flexible and adjusts based on what the management needs. The seventh point is audit requirement. What about auditors? Cost accounting may require a cost audit in specific industries. Financial accounting must undergo a statutory audit and there is no exceptions. Management accounting does not require any audit at all. The eighth point is frequency of reporting. How often are reports generated? Cost accounting reports are created as and when needed, usually for internal use. Financial accounting reports are made annually or quarterly depending on the regulations. And in case of management accounting, reports are generated frequently, even weekly or monthly to support fast decision making. Ninth point is focus. Lastly, their main focus areas. Cost accounting helps with cost control, cost reduction, and pricing decisions. Financial accounting focuses on the overall financial position and profitability of the business, and management accounting supports planning, budgeting, decision making, and performance evaluation. So, this is all about the first chapter of cost accounting, that is, Introduction to Cost Accounting. Thank you for watching and subscribe to my YouTube channel. Thank you once again.